Bitcoin is making headlines again with its impressive rally, reaching levels not seen since last summer. On Tuesday, the cryptocurrency rose more than 7% to $26,110.50, according to Coinmetrics, extending its Monday rally. In this video, we'll take a closer look at what's driving this surge, including the latest inflation data and other factors that are impacting the cryptocurrency market. First, let's talk about the recent inflation data. The jump in Bitcoin coincided with the latest Consumer Price Index reading, which showed an increase of 0.4% in February from January. This matched the consensus estimate of economists polled by Dow Jones. Meanwhile, the core CPI, which removes volatile food and energy prices, showed a monthly increase slightly above economists' expectations, and a year-over-year change in line with expectations. According to Owen Lau, an analyst at Oppenheimer, CPI data today is in line with consensus. Together with the banking crisis, the market believes that the Fed will pause rates earlier than before and the terminal rate will be lower than previously thought. The likelihood of a rate cut this year has also increased. This news has given investors renewed optimism, as they speculate that the Federal Reserve will be less aggressive in raising interest rates. But that's not the only factor driving the surge in Bitcoin. The cryptocurrency has been on a tear since Friday, when regulators shut down Silicon Valley Bank and Signature Bank. This led some investors to speculate that the Fed would be less aggressive in raising interest rates, which in turn boosted demand for cryptocurrencies. Bitcoin's impressive gains have also had a positive impact on Ether, which rose 3.7% to trade at $1,747.11. As of Tuesday, Bitcoin is up about 28.5% since Friday, and 59% for 2023. Ether, on the other hand, has gained 20% since Friday, and 45% year-to-date. According to crypto data provider Kaiko, Bitcoin's correlation with the Nasdaq is at its lowest level since the early November collapse of FTX. This means that Bitcoin's price is still largely driven by macro data, and some analysts expect to see a bigger return to that correlation, even with idiosyncratic events driving much of the action in 2023. So what does this all mean for cryptocurrency investors? It's clear that the market is in a bullish mood, and many analysts believe that the upward trend will continue. However, there are also risks to consider, such as regulatory crackdowns and potential market volatility. Overall, it's an exciting time to be involved in the cryptocurrency market, and we'll continue to keep you updated on the latest developments. If you enjoyed this video, don't forget to like and subscribe to our channel for more updates on the cryptocurrency market.